share and a watch party. I'll go to Greenwood. I don't hear no music. Okay, maybe I don't need to hear.
I don't think my music got recorded, but here we are. Hey, John.
Hey, I'm doing all right. How you doing today, man?
I'm doing good, man. We're back after a week of break
Yeah.
here on the Real Estate 101 video podcast.
Okay.
And today we're going to talk a little bit about taking advantage of these historic low interest rates.
Yes, they're low.
I'm 51. I'm going to be 52 next week. In my entire lifetime, we've never seen rates like this. I believe we hit 2.88% last week.
Wow.
So it is a crazy time, but not everybody gets those rates. Not everybody gets qualified, do they, John?
Nah, man. That's one thing I want to talk about today, because I got a lot of people that I'm talking to, and they ask me about the rates. I'm getting phone calls like crazy about the rates. And I'm telling them, hey, 3 things we got to get, make sure we're correct. It's more than 3, but the 3 that I want to, talk about today is very important, especially if you're dealing with me and you're coming into the program. It's about being patient. You didn't get in this situation overnight. You're not going to get out overnight. So there's some things that we're going to talk about today that's going to, kind of just, help people understand. And I want to put this out for the new people that are coming out, Alex. So let them know we can send this podcast out to them and, give them a little information on the industry. But the rates are low, like you said, they low right now. They 2.88, man. That's awesome. I never seen them that low, ever.
Yep.
Yeah, I never seen them that low. But that's awesome.
Well, you haven't seen that low because it's never happened.
Oh, okay.
It's never happened in the history of mortgages in America. That's never happened.
Okay. Well, hey, I know I never seen them like that. So, I mean, one thing I always tell people is, people with good credit always been able to buy houses. But the rates right now is just excellent for a person to come in and do the things they need to do right now to purchase a house. I was looking at a lady, $300,000 house will run you with a 3% rate. I think I put in about 3.2 or 3.1. Your payment without tax and insurance was somewhere around $1,300 a month. I mean, that's amazing. So you got to imagine that's $300,000 house, and that's without tax and insurance and PMI and all that stuff. But I'm just saying, around $1,300 a month.
Let's add back in $400 more. So for your taxes and insurance, so you're about $1,600.
$1,500, yeah.
To live in a $300,000 house.
Yeah,
probably 4 bedrooms or more.
Yeah.
That's especially in South Carolina. You could buy a lot of house for $300,000.
A lot of house. I had a lady call me out of DC, and I was telling her, you guys up there in DC, the houses you got, are $200,000-$300,000 houses, and you should be buying right now instead of renting, because the rent up there is $2,000 a month in certain parts of DC. And I'll tell them you can buy cheaper than you can rent right now. So I mean, it's awesome right now to be able to get a house.
Yep.
And we do have some people on, so we want to let the people know that you can send us messages, anything you want to send us, and you want to answer some questions while we live online. And
but you got it fixed.
While we live online, and we can go.
How much John, time on this? I want to welcome Catherine, and just to remind everybody, because I don't want to forget to tell people, if you're watching on Facebook or you're watching that too, but if you're watching their Facebook, where we're broadcasting both on John's personal page and his real estate channel and on YouTube, you can enter comments live, and we see them, and I can pull them into the chat, and we can talk about them. So Catherine has jumped in, and she's asked a good question. How much is down on that $300,000 house you were talking about?
Well, I mean, you got if you go on VA, it's no money down. Of course, if you do the VA loan, you can get in for
USDA.
USDA, 100%.
Probably expensive for USDA.
Yeah, we had to pay the closing costs. But usually 5%, 3.5% for FHA, 5% for conventional. So if they go on conventional, they got to put 5% down. If they go on FHA, they got to put 3.5% down. And they go on VA, they don't have to put any money down. It's 100%. But they do have to pay prepays on that. I will let people know that and close. And usually, the seller going to pay the closing costs in most cases. In most cases, not all cases.
Right.
So keep that in mind. You don't always have to pay. You're not always going to get all your closing costs paid. That's just in some cases you'll get it paid. You might have to come to the table. So that means if you put now, you got 100% financing and your closing cost come up to $4,000 and the seller said I'm gonna pay $2,000, that means you got to bring $2,000 to the table.
So let's talk about the things. The title of today's chat is the 3 essential things you got to do to get financially prepared to buy a house in 2020. Yeah. And you talked a little bit about something, but let's go like down the list. 1, 2, 3. What is different now about getting a mortgage this year that wasn't true necessarily last year?
Well, and this is not any particular order, but I mean, credit score's always been top. You got to have that 640, 650 credit score. That always been top. DTIs has always been important. FHA, you got to be under 41%. Some of the banks, they want you under 39%. But the big one that I see now that I'm hearing from the banks and I'm hearing from everybody that have changed a lot is reserves. I mean, the reserves are something that you got to have at least 6 months. And usually in the past, when I was doing loans for people, if you had 3 months reserves, the bank would let you slide. But now you really got to have that 6-month reserves loaded in that bank before they even look at you right now. So those are the 3 things that I try to tell people when they come in to me. Number 1, we got to get the credit score up to 620, 640 is FHA, but I try to get up to 650. Number 2, you got to have a 41% DTI. You got to have
define DTI for the folks at home.
Debt to income ratio.
Okay.
That debt to income ratio. You had a little chart. We can write it up there. We can do one if you want to. If you got time. And that debt to income ratio, where we can actually break that down with the expenses and the gross income. Now the bank does it off gross. When I'm working with a customer, of course I do it off a net. But if you got time, we can do that. We go back over that in a minute and actually show the people how that broken down, how we break that down, the debt to income ratio. And then the reserves. Reserves is like an estimate of how much your payment is going to be. So if your payment $1,000 a month, then they want 6 months reserves. Then they're gonna $6,000. But now that reserve is a little flexible on one condition: credit score. So you got like a 700-800 credit score, they might take 3 month reserves. They might not go for the full 6 months. But what I'm seeing and what I'm hearing in the industry, Alex, with some of the loans that we got going through right now, is reserves is key. I mean, that's key. And I had one bank even told me, they might even go to 12-month reserve, and that's crazy. But they might go to 12. But the rates, you can get the rates, but you got to have 12-month reserves. So I did hear that. So hopefully we won't go to 12-month reserve, but I did hear that. So to let you know that that's the biggest thing. The 3 things: number 1, credit; number 2, reserves; number 3, DTI. And then of course down payment, follows after that. Whether you go on VA, FHA, USDA, whichever one of those you going to, will determine your down payment. But and be patient. I tell people all the time, you got to realize, and Alice, hopefully you can comment on this one, is the banks are not open full. They're not fully open right now. I mean, even though we kind of look like we're getting back to a normal, even though we're not normal, it's kind of like we're getting back to normal. The banks are still working with half a staff. And most of the bankers I deal with now are still working at home. I mean, they're working from their computer at the house. So they're not even back in the office working full time. So the loans are not going through as fast as normal. FHA told me the other day, not FHA, USDA, they working on March files right now. That's how far they're behind. Right now, they're actually working on March files. But that doesn't mean you can't get a loan. That just means that it takes time to get the loan processed. I've been waiting on appraisals for 2 or 3 weeks. So I mean, it's just a matter of just getting them out there and getting the loan and getting it taken care of. Because some people just still got the COVID thing going on. About walking in, going in people's houses and stuff like that.
Well, so what you're saying is essentially it's going to take some time.
It's going to take some time, yeah.
And you don't want to not be ready on your end. Like if it's going to take them a while to review your file, you don't want them to, by the time they get to you, to tell you, oh, well, your credit score is 30 points off.
Yeah.
Or you're going to need a lot more income. In other words, you want to be, when they say, I need this, like, oh, it's right here. Boom. Let me give it to you. Or I need that. You need to be able to give it to them. And you don't need to be going in there with don't be walking to the poker game with a weak hand.
Right.
Because you get to pick your hand.
Right.
It's not just like it's randomly there. You've got save the money, get your credit right, and look at your debt to income. If you don't have to buy something with a loan, don't.
Don't touch that reserve money. Do not touch that reserve money. That reserve money is there for you to purchase that home. So don't go buy that car. Don't do anything with that reserve money. You know, and that's some of the stuff, Alice, that we see out here in the industry is when a person get approved, they say, okay, I'm approved. Now I can go do something. No, you approved, but we still got to get you to the closing table. I've seen deals turned down at the closing table. While we both right there, they pulled it one more time, and I see it. You know, so so don't do anything while you're going through these loans. And I tell people that, reserve money, credit score above 630, and DTI.
DTI of what amount?
FHA is under 41%. DTI under 41%. Most conventional, they around 30, they around 39%. You know, conventional, they do their own thing. They got their own, laws of how they do business. So, because it's pretty much, it's their money they're lending out. So, and I did find out this too. I want to say this: student loans. I found out that with the student loans, that if you go on VA with the student loans, they take. Let me pull this up because let me make sure I got the right information on that, because he sent it to me the other day, and I want to make sure when I'm talking to you guys out there that I'm giving you guys the correct information on student loans for VA. Now, FHA student loans, they take 1%. They take 1% of that loan amount or whatever your loan is. So you got a $120,000 loan, that's an extra $1,200 that's going to be added to your DTI on your payment. Okay, keep that in mind. But for a VA, he did send me this because I had that question on VA. He said they use 5% of the balance divided by 12 to come up with the monthly payment. So that's VA. So if you're going for a VA loan, you're going for a VA and you got student loans with VA, that's what they use. They use 5% of the balance of your loan divided by 12. That will get you your monthly payment. They're going to add to your DTI. Okay, so it doesn't matter if you under deferment. It doesn't matter if you don't set up payments with them or anything. That is what they're going to use for VA. For FHA, they using 1%. So you got $50,000 loan of FHA loan. 1% of that, $500 is going to be added to your bottom line. So with VA, they're a little bit more lenient on VA than they are on FHA.
FHA will add how much?
1%. 1%. Whatever the loan amount is, 1% of the loan amount. So if you got $100,000 student loan, you add $1,000 to your payment every month. Your monthly payment every month. That's 1%.
Which makes sense. I mean, you're going to have to pay this loan back. So we're going to just look at your balance and figure how long is it going to take you to get there.
Yes.
Right.
Yes.
So.
Yes. Yes, and a lot of people, what I'm hearing that they coming to me, they are saying this right here. Well, I got a payment plan set up at $20 a month. That doesn't matter. I want you guys to really understand that doesn't matter. They want that 1% added in there
because that's not going to last forever. That program you're under is a temporary fix. Now, remember, the bank's lending you money for 30 years.
Right.
That's typical unless you get a 15-year mortgage, but. They're going to know, and this is the bottom line to all the things we're talking about. A bank is not making a ton of money loaning you money at 2.88%, which is the current, rates as of last week.
Right.
So if we're going to make you this loan, we're going to make darn sure you're not on the razor's edge of being able to pay it. I talk it like people always redline in their car. They're driving their car with the RPM on the gauge right at the highest amount. I'm like, that's the place you don't want to go. You don't want to live in the beginning of the red zone financially. Like every month you wipe your account because everything you made went right back out. Right. You've got to show some And I know life's tough and there are expenses and there's unexpected things. And that's the thing. The bank doesn't care about that. They care about, are you going to be able to pay this back with reasonable expectation based upon what you're making now, with some buffer for those unexpected, car needs new tires, or my hot water heater just went out,
or you get sick,
right? So
even
you
if
got to have some buffer.
Even you get sick, I used to tell people this right here. Even if you come down and you get sick, the bank still want their money. They have thrown people out the house that's sick.
Right.
So I mean, you got to. It's just the real world. I mean, and I think sometimes that's one of the things I want to talk about. I want to make sure I put out to people, and I try to tell them. Me and Gerard said this years ago. We're gonna tell the brutal truth, and the brutal truth is that they really. Good morning, Van. How you doing? So they really we're gonna tell the brutal truth, and they really it's heartless. I guess you want to say with them. It's their money. When it boils down to it, it's their money.
Well, would you loan somebody money if you didn't really have an idea they could pay you back? I mean, unless they're your family or friends and you're willing to let that money go forever.
Yeah.
If you just, you don't know the people at the bank and they don't know you. And if I'm going to make you, I'm going to stay in business as a bank.
Yeah.
I'm going to want to make sure you're paying me. Well, that's all they're asking.
And that's a privilege if you get money from the bank. You got to understand that's a privilege that you got. They're not obligated to really give you this money. So if you happen to meet their criteria and you meet them, it's a privilege that you'll get this money. So
and something else to think about too, the financial discipline that comes with owning a house, where you have to get yourself ready to own, is not good just for buying a house, but it's good just in general as life.
Yes.
Know where your income is coming in, know where your income is going. Mm-hmm. If it's not essential, don't buy it.
Yeah.
Yeah.
It's amazing out here these days. Even with my lifestyle, I'm having to adjust some things because, like I say, if it be another shutdown the next couple of months, you down for a while, and you're not working, people not working, so the bank's looking at all this. So you got some people right on the edge that want these loans right now, but if it shut down again, the country shut down again, where are we? I mean, those loans are going to be put, the ones that's already behind is behind. Then the ones that coming in are going to be behind. So you got to realize you coming in behind people that's already behind.
Let me talk a little bit about that. That is something that's coming in the industry, is that there are a lot of people who have not made their payments in several months due to COVID. There's a lot of people that just straight up lost their job, and the banks are preparing for the day when they're going to have to start foreclosing some people, because they've gotten forbearance, which is a bank term for it's cool for a while. We'll put the payments aside. We're not forgiving them. You have to make them up later. It's August. We started this in April. Later is now.
Right.
So now the banks are coming back to people and saying, you do owe this, and we do need to see you make payment. Not one payment, 5 payments or 4 payments or however much you deferred, all due at once. And a lot of these people are not going to be able to swing it. And here's the thing: when you are going into a house with not a lot of money down, and you did that 2 or 3 years ago, let's say, sometimes you think to yourself, I don't have a lot in this. I'm just going to give them the keys and go. And so there will be houses coming back to banks because they are going to demand payment from people that aren't going to be able to make it.
Go back to what you said, though. So what you said, one of the most important things is it a good idea to buy a house with no money down? Because like you just said, if you ran into a situation like that, then you had equity in the house, you would be able to refinance that house and get that paid. But if you don't have no equity in the house, you're going to the house with no money down, and you at the top of the game with the no equity, then you can't even refinance the house because the house is not even worth it. So so let's talk about that for a second. Is it a good idea for a person to take 100% financing, or should they really save that money up and put as much money down as they can on the house to gain that equity?
It depends. It depends on a couple factors. Factor number one, if you're going to go into a no money down house, you need to make sure these are the true facts about yourself. One, you're not going anywhere for a while.
Okay.
Because if you're moving into a place or buying a house and you think that in a year or two, or maybe even 3 or 4, you're not going to be there, your job's going to transfer you, your work is not stable, it might not work, you don't have the equity to sell your house. If you use a realtor and you have closing costs, figure about 8% of the value of the house is required to sell it. Okay. So if you don't even have 8% equity in a couple of years, which you're probably not going to have unless you're in a rapidly appreciating market, you're going to have to come to closing with money. So my first rule is don't buy a house if you think you're going to be leaving in 2 years, or let's say 3. Let's just say 3 for safety's sake, because it's just you're buying a house because you're setting down roots. You're going to be there for a while. So that's rule number 1. Rule number 2 is, remember, when you're doing a house for no money down, nothing in life is free.
That's right.
You pay extra money per month for the extra risk that a bank incurs for having you be a no equity situation. So you're either going to pay that through what's known as PMI. That's right. Private mortgage insurance, which adds an extra, I don't know, on a $100,000 house, John, you're probably paying an extra $100 a month.
I got PMI insurance. I got a deal right now. It's amazing. $89 a month on PMI.
$89. How big is the loan?
115.
Okay, so PMI is just like insurance money. If you don't get sick or you don't get in a wreck and you paid your insurance from last year, that money's just gone. It's just like cable.
Yeah,
you're just paying extra every month. So by putting 20% down or 10% or more, it breaks down on increments on that PMI. You're going to save that expense.
Can you do that real quick? Put that on there, and let's put a payment with the PMI so people can really see what we're talking about. Like put a payment in there, then PMI, then taxes and insurance, so we can show how much of that is actually going toward the principal and how much that is actually, is not even coming off of the house. Because like you said, the PMI is not coming off of the house at all. That's just money that's just gone somewhere. Like for instance, like payment of $500 a month. And then you got PMI of $70 a month. Then you got taxes and insurance. And can you write that? Can you just put that on like you were typing just a minute?
Yeah, give me a second. I'm going to do that in the form of a spreadsheet here.
Yeah, because that's something that people need to really understand. Is that PMI is expensive. So sometimes it might be better for a person to put that money down on the house, especially in these times. And like I say, Alice, I'm just seeing people. It's kind of being misleading a little bit because they see we moving a little bit better than we normally move, than we were moving 6 months ago, but we're really not, because on the bankers end, they have staff. They're not even open. You still going in banks by appointments. So it's not really moving as fast as people think it is, to be honest with you. But in people's mind, we can go get this loan. It's not that easy. I promise you, it's not that easy. These banks are not moving as fast as you think they're moving. They are slow because they work with half a staff. They're really slow. They're really slow.
Well, also too, the requirements are much more, much tougher.
Yes. Yeah, right? They're looking at the loans a lot. They're looking at the loans a lot harder than they would normally look at the loans. Right now they're looking at them. I mean, normally where you might slide through with 2.5 months reserves. Now they're saying no, I can't do that. Right. I got to go with the full 6-month reserves. And like I say, guys, that reserves is based off of your credit. So if you got a 700 credit score, then they might not be that tough on you on the reserves. Then you're gonna be with a 620, 640. I got some deals I'm working with now and then I want to say this, Alice, while you're doing that. Another thing, to keep this in mind, if you got 2 people buying a house, and one person credit score is like a 7 and the other person's credit score is like a 6, they're going to base that score off of the 6. They're going to base them rates and everything off of the 6. They're not going to base it off of the 7, especially you need more people on the loan. So guys, keep that in mind too while you're out there looking for homes. So it's best that both parties, husband and wife, co-buyer and borrower, get the credit up on that. Just let you guys know that while Alice putting that together.
Forget the order of my payment calculation. What goes first, the dollar amount or the term or what? Sorry, because I'm coming up with some funky calculations. Yeah, I don't know what it is. you ask me stuff on the fly. Hey, you know how to do this, don't you?
Yeah, I was just talking about typing.
I'm so flattered you think I'm that smart.
Yeah. Yeah. Well, you do some good. You do some
but
good.
Let's just say like out of $100,000, 3%, 30-year, just the PITI is going to be about $300 a month. Okay. Because 3% of 100,000 is $3,000, plus you got a little principal in there. So that's that. So that's just that. So you got taxes,
and let's
insurance.
Just say, yep.
Taxes are going to be $100 on a house like that.
Yeah, about $100 a month. Man, I tell you what, the insurance is like on houses like that are going up to about $1,200, $1,000. They high. You know, I think it's higher than 45. I've been getting higher than 45 a month, Alan, just between me and you.
$45 a month for the insurance?
Yeah, I've been getting higher than that. You know, I know it's based, I've been getting somewhere right around like $70, $80 a month for insurance. Yeah, in that neighborhood.
Okay.
Yeah. Just to let you know, I've been getting higher than that.
And then you said that last PMI you had was what?
$89 a month.
Let's call this 80 because this is a $100,000 loan.
Yes.
That was 115, I believe you said.
Yes, and guys, you got to remember this. That $80 a month you paying in PMI, that private mortgage insurance, is not going to anywhere. It's not coming off the balance of your property or nothing. Only thing you getting is that I think Alex got that 560. I don't know. Is that the total of everything?
That's the total of everything.
Okay. So that total of everything. So that $80 a month is not going anywhere. The tax insurance, of course, is going to the tax and insurance of the house. So the rest of it is principal interest. But that's $80. If you take $80 and you got PMI and you do that times, let's see, let me get to my calculator over here. Let me play with my calculator a little bit now, if I can. Some good music right there.
Yeah, man.
So $80 times 12 months, that's $960 a year. That's just going away. And you do that times 10 years, that's $9,600 that people it's just going. It's just
going. It's $1,000 a year.
Yeah, $1,000 a year. It's PMI. It's the price of owning a house. The price of buying or borrowing money.
And normally, John, PMI is what they say. If you put 20% down, you don't owe us PMI.
Right.
If you keep paying this mortgage and you're knocking down the principal balance to the point where you are at a PMI of 20%, 80% loan to value, they don't turn the PMI off.
No, they don't. You got to do that.
You have to go make a case for why they should do it. And if it's like right on 80%, they're going to turn you down. They're going to say, come back to us in a couple of years.
Yeah.
So some people, and sometimes things in life like monthly payments to get drafted out of your account, you don't think about really, right? You don't think about those regular recurring payments that you're having drafted. I've seen people pay PMI to the day they zero out the balance on their mortgage.
Wow.
And like, dude, you paid $1,000 extra for probably 20 years, 25 years that you didn't have to. You paid them an extra 25 grand. You didn't have to. You got to be very careful that they do forget about that stuff.
Yeah. And like I say, that's why I always taught people to buy houses, on a wholesale level and then go in and fix them up. And this is a good case of that. So where you can buy the house at 65% of value, and then go in and fix that house up. And then now you're living in the house that you actually fixed up. And you can pretty much drop that PMI down or eliminate the PMI,
Right.
So, that's why.
Also, you eliminate the PMI because you have equity.
Yeah.
You created sweat equity.
That's right.
Quote unquote.
Yeah. Yeah.
And so sweat equity is tax-free money too.
That's right. And Alice, I tell people this here, and I know you can back me on this. People got to be patient to find those kind of deals. Those deals don't just fall off the truck, when you run down the road.
You're right.
You got to be patient to find those type of deals. But they're out there. I mean, you got estate deals out there. You got them out there that you can find, but you got to be patient to find them.
Well, you have to be. That's one thing you need to be is patient. The other thing you need to be is not picky.
Yes.
Because if you're going to be real picky about which one you're going to do, that's just not going to be helpful.
Yeah.
Because listen, man, it's like, do you want a house with equity? It doesn't have to be your forever house.
That's right.
You go buy another house in a couple years, keep that one, turn it into a rental, and make monthly cash flow from it, and make some generational wealth. That's your base. That's your start point. I've seen people like start off when they're 20, and they buy a beater junker house.
That's right.
And they move in, and they're willing to live in a bad house, but they'll just go in and paint the walls this month. Next month they put down some new flooring. Next month they go and do a new roof. And the next month, and then in a year from now, they're doing this all on their own. And then they go sell that house for like 100%. I mean, they put 50 in it and they made 100.
Yes.
And you can do that and put it in the next house, or just hang on to it, turn it into rental money, and then that rental money just comes in every month. So
I got a friend and they older now. They kind of mentored me back in the day, but they older people now. But they told me their first house they bought, it was $50,000. They went in and fished the house up at 50, turned around and sold it for about 110. Made that extra money, then took that equity out of that one and went and bought another one for about $100,000, $150,000. And now when I talk to them, they living in an $800,000 house. And they had flipped their stuff up. They live in an $800,000 house that at that time they only owed $75,000 on. They paid it with cash, most of it, so they only had a $75,000 loan. And imagine right now the house is paid off. I hadn't talked to them in a while, but I'm just saying the way they did it was like you said. They just we get in this world now where you think, well, I got to have this big house right now. I can't live here. And most people that got the big houses, if you ride through the neighborhood, they done been together 10 and 20 and 30 years. They don't work their way up to that house. They didn't just come right out and get married and go out and buy and get in debt like that.
I'm telling you, man, you want to lose sleep? You lay in bed at night worrying about how you're going to make the payment tomorrow.
Yeah.
That is an awful way to live, and it'll put you in an early grave.
Yes. And that's what we try to teach. And we try to coach people and get people to understand that this little $100,000 house that you might can get for $65,000, you coming in with instant equity, your monthly payment going to be low. And Alex, to be honest with you, you just did something at $500-$600 a month, and that was a house you did around 1,100, 1,200 square feet. You got apartments out here for 700 square feet that they rent for $700-$800 a month, and you don't have no equity. You'll never own it. You got one bedroom, and you have no land. So people got to understand that this is where I'm coming from, and this is where I'm trying to go to. You don't have to go. You can't go to 3,000 square feet. I'm not coming from 700 going to 3,000. Take your time and work your way up, because there's other factors involved, like you just did with the PMI. There's other factors involved in this loan that we try to get out there and we try to teach you and try to help you move forward. What the Van? There go Van saying something. What Van saying?
Purchased his first house for $13,000.
I purchased my first one for $13,000.
Yeah, Van. It's not impossible. It's not like HGTV, but they try to, throw all the flats and all that kind of stuff. Y'all, please don't learn about flipping houses from HGTV, because remember, they're trying to make on the television to get you to watch. It is a lot of sweat, a lot of searching, a lot of vendors that don't do what they said they're going to do, don't show up on time, and then they'll do it worse. You wish they never showed up to begin with sometimes. But if you will take charge and have some discipline, defer your needs, wants, and desire. Determine what's a need versus what's a want. A lot of people want this and want that, but they don't need it. And when you learn to separate those two, and see, Van agrees. He said most definitely. See, when you learn to separate your wants and your needs, life becomes easier. Discipline is not hard. Living an undisciplined life is hard. Because you're constantly bombarded by things from all directions hitting you, and you have no control. You're just drifting down the river. Anybody can float downstream. You really have to work at the rest, but it's not that hard. It's just little steps every day you have to do, and don't skip.
That's right.
Just like eating right, you need to do every day, or working out, you need to do every day, or socking away a little bit of your money every day, every paycheck.
That's right.
Those things just add up over time. They're cumulative.
Yeah.
No.
And a lot of people, you work so hard and you work hard for 10 and 15 years, and then you look back on it, you're like, well, I don't even own a house right now. So those are some things that you
no
most definitely have.
Man has a no HGTV policy. I think it's
no,
good.
man, you can't do it. I mean, I promise you. I tell people when they first come to me, please stop looking at that. Because they do them houses in what, 7 days? They flip it.
It's not just 7 days. It's we messed this up, so we're gonna rip it all out and put it back up, and we still made a profit. No, man, you didn't.
A sludge hammer to it. They take that's what I'm saying is like most of when I go into houses and we're looking at kitchen cabinets, a lot of times, and I made the mistake too back in the past, you tear them kitchen cabinets out, but a lot of if that attached to the wall real good, you can just change the facing on them and new knobs on them and
just paint them, man. Covers, new knobs, and a paint job.
Yeah.
Some content inside, and you're all ready to go. It's
good. And then later on down the road, after you get into the house, you want to change the cabinet, you can do that. But the first stage is, let's get you into the house.
Right.
Let's get you to the house. And take care of the major stuff of the house,
right.
That you got to take care of. But yeah, people is I'm just trying to help educate the people out there to be able to buy houses and buy them right. You make your money when you buy. You don't make your money when you sell. And that's for retail customer and for the wholesale customer. So as a retail customer, you buying the house, you make your money when you buy, because one day you might want to sell. So you still make your money when you buy, not when you sell. Keep that in mind.
Not when you sell. No, not when you sell.
You guys keep that in mind. But so go ahead.
Let's go back to the screen. I want to recap our
conversation.
The big points today about your credit scores and stuff.
Okay.
And everything else. So 3 steps.
Yes.
Reserve money. You need 6 months of living money in the bank. And you ask for more. That's a minimum.
And that's 6 months. Yeah, sometimes they ask for more. But guys, keep in mind, that's 6 months based off your monthly payment. So if your payment's $700 a month, that's 700 times 6. So whatever that payment is going to be. So you lose your job, at least you got 6 months in the bank to make that payment before you find another job. That's the way the banks look at that. So, but it's good to have more though. But I'm just saying that 6 months is the minimum that they are going to right now. Okay.
Credit score above 630.
Most definitely, credit scores above, and that's all 3 scores, and that's the middle score they're going to take. So that's not just having one credit score above that. That's all 3 scores, and they're going to take the highest of the middle score is going to be the highest. So if you got a 631, a 640, and you got a 650, they're going to take that middle score, and that middle score would be that 631. Okay, that's the way they're going to take. So guys, keep that in mind. You got 3 credit scores. That's that middle score of the 3 that they're going to take.
And the DTI, you really should be under 41%. Debt to income, the sum total of all your monthly debt payments against your income. John, is that pre-tax or after tax?
Oh, that's before taxes.
That's before taxes. Okay.
Yeah, that's before taxes. Yes.
Listen, 41. if you're that's now, correct me if I'm wrong, that's with you having the loan.
Yes.
Like calculate your loan plus everything else. You can't come in with already being at 41%.
Right.
And then try and get a mortgage, because now you're paying 70% of your income is just going to debt. You have no money for food.
Right. That's with your monthly payment coming in under that 41%, along with all your bills.
So young people getting student loans.
Oh man,
you're getting a loan and a degree that's going to make you money.
Yes.
Okay. Because if I can say anything to the college people or the young people, do not get a liberal arts degree with no idea with what you want to do with it, and then rack up a huge debt payment, because you'll be crushed in trying to get a home loan.
That's right.
Crushed.
It's kind of like, and it's kind of bad too, because you want to get a home. You're working hard to get a home. That's why you work. You work every day to give me a nice home, nice picket fence. But now you don't win and got $100,000 worth of student loans, and now you ain't even making $100,000, and they throwing that $1,000 a month on your bill. I mean, that's kind of like that's not good.
No, it's not good. Make sure you know why you're getting it, and you know that it makes you good income.
Yeah, make enough income to at least do that. And this is good information. This is good information, because they can go ahead. They know if colleges cost them $200,000 a year, and over a 4-year period, and they gonna come up with $150,000 loan, go ahead and figure that $1,500 of money in there. It's there if you go on FHA. It's there. So you better be prepared to go ahead and pay those loans off. I'm telling you, I got people coming to me all the time with high student loans, and that's what's knocking them out. And they making $40,000 and $50,000 a year, and they got $200,000 student loans, and it's hurting them. It's hurting them. And that last one, Alex, we didn't go over was VA, and that was a new one that we talked about with the VA. I think I said 5%. 5% divided by 12 months. That's how they get that VA payment. So they helping you out a little bit with the veterans. So it's a little help on that level. But that's how you do it. Yes.
Okay, gang. Well, I think that's covered it for today.
Oh yeah, definitely.
Van and Catherine, thanks for commenting, and of course we would love to hear from more folks. You can always watch our stream after the fact, and if you have ideas for shows, please add to the comments or shoot us an email. As I put up there, there's John and my contact information. JohnFullerBuzz@gmail, and I'm Alex Leah-Bailey at gmail.com. John's book, all about the things we talked about today, are available from his bookstore, store.johnfuller.com. If you're in the need for commercial real estate in the Irmo or Columbia area of South Carolina, give me a call, give me an email, and I'll be glad to hook you up if you're a small biz looking for office space. Or if you got a deal or you want us to look at, like I've found a house, I think this might be a deal that you talked about where you can go in there with and fix up and make some equity. Shoot it past us, and we'll tell you. We'll run our numbers to the best of our opinion as to whether or not you've got yourself a diamond in the rough, and maybe we'll help you get the financing to get it done.
That's right.
So that's where we are.
And one thing, Alex, is johnfuller.store. It's
johnfuller.store, not store.johnfuller.com.
Yeah, johnfuller.store, but that's okay. Johnfuller.store. But like Alex said, you guys got a deal. Get with us. We'd love to look at the deal live on air too. So I mean, that way we can help educate other people. So you got your cell phone, and Van, you up there in New York. Let's look at some deals and talk about some deals up there. Give us a call. Get Van on live one day. Get on live with us one day, and let's look at some deals up north.
All you need is a cell phone. If you got a smartphone, we can get you on the stream. Just be in a place where you've got a good internet connection. That's all we ask. Yeah,
I've been in bad places, and I'm working on my studio, so my studio should be up next couple of weeks. And I know I said that 2 weeks ago, but it should be up next couple of weeks, and we're gonna get it going. I'm at one of my partner's houses right now. All right, thanks, man. We got another. My biggest.
Becky, I'm not sure what your biggest problem was that you were commenting. You just popped that up there. Sorry about that. And then Van had said, "Great show. Will do. He'll get back with us, and we'll get the three of us on." Hey, man, we can get 10 people on this screen at one time. Wow. So we'll be in little boxes. It'll be like the Brady Bunch episode where there's all these people in boxes. I'm sure how old I am. I know what the Brady Bunch is. But yeah, we can bring people on, and it doesn't matter if you're in the country. You could be overseas. Yeah. As long as you have internet, it doesn't matter. This is a brave new world.
Yes. Hey, telling you, hey, let's make it happen. I want to help people get their homes this year, next year, and student loans. You say student loans.
That was her biggest problem is student loans.
Student loans.
I'm telling you, man, student loans is serfdom. It is serfdom. Yeah. It's one step away from slavery. It's awful.
We got to find a way, Alice, to get people to handle these student loans. I don't know. We got to come up with some kind of creative way, some kind of creative idea. I don't know. We got to come up with something that maybe can help people.
The first step is don't get into it.
Don't get it.
It's easier to not get into it to begin with. The problem is nobody tells an 18-year-old that. That's the problem. Is that we have such a thing in this society that getting a college degree is important. If you want to be a doctor, that's great. We need good doctors. We need good engineers, scientists, all kinds of things. But you got to ask yourself, is this $50,000 education, or $100,000 education for a job being something that pays $15 an hour? Is that worth it? No. So you just got to make sure it's like an investment. Is this investment worth what I'm putting into it money-wise and 4 years of your life?
Yes.
So be careful. because we sure do need people in the trades. Oh my gosh, electricians, plumbers, carpenters, framers, roofers.
Yes.
Oh my gosh, we are so hurting for people that'll do those things.
And there's so much money in that. Like I say, one of my cousins, he's an excellent carpenter,
and you get paid to learn.
Yeah,
it's not like you have to give somebody money. If you'll be an apprentice to a guy, you could just start and a woman, and then you'll learn your trade for free.
That's right. That's right. You know?
I'm going to give Becky a hand clap. I refuse to let my son take a stick. Good for you, darling. That's awesome.
That's right. That's right.
I preach that too.
And another thing, Becky, one thing since you said that, owner finance is good. And another thing too is to make sure that we buy right, like we talk about, that try to keep that house down with some equity built in it, so that you can kind of pull some money out. You make start a business and do something to help pay them student loans off. But it's all about buying right. It's all about and thank you for listening to the show. Give us a call. Give us a call and talk to us. We can help you find something buying right. Make your money when you buy.
Make some phone calls. Pound the pavement, and you can find deals.
Yes, they're out there. They're out there. I mean, I've had 3 people call me on deals this week. Because like every deal is not a deal, but I've had 3 people call me on deals this week, and so they're out there, and people are trying to sell houses right now. Especially if we got 2 houses, 2 and 3 houses, they're trying to, hey man, I need to downsize. I need to go here because they don't know what's going to happen going forward right here. Okay, guys. But Becky, give us a call, Becky. Alex, you got our numbers you can put across there? So she can reach.
I've got our email addresses there.
Well, so you can email. You can email us.
Email. Yeah. I'm on Gmail. You're on Gmail.
Yeah.
And then we can always do a call after that. But let's collect some data.
Okay.
I'm the data guy. Let's get the data first.
Yeah.
The house.
There you go. There you go.
All right, guys. Great show. We'll see y'all again next week, 11 a.m. Remember, like, share, subscribe, tell your friends, tell your neighbors, wake the kids. Yeah. And as they say with David Letterman, and we'll catch you guys next Wednesday.
It's funny, Alex. I was looking at the show what Zari did, and the first thing Zari said was subscribe. So them kids know that. We don't know it, but them kids know it. What she said something here?
Looking for something in upstate South Carolina.
Okay, great.
So,
great.
All right, thank you,
Becky.
Got
something, Becky. Okay, we'll talk about it.
Oh yeah, we do actually.
Yeah, we'll talk about it.
All right, we'll talk to y'all later.
All right, then.
Y'all have a good one.
Good one. Appreciate y'all.
Bye-bye.
Bye-bye.